Hey everyone, I'm going to go over some really big details that I think Palantir stock investors should know about Palantir and its business, the breakdown between commercial and government revenue, and the total contract value and the contract duration, all of which I think are critical details for Palantir stock investors that could seem complicated. So I'm going to break them down and try and simplify them as much as possible for non-professional financial investors to digest. So let's take a look.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
All right, so the first thing I'll go over is the first quarter trailing 12-month revenue from their top 20 customers, which Palantir said increased by 9% year over year to 55 million per customer. So looking back 12 months, the revenue from their top 20 customers increased by 9%, their top 20 customers. That demonstrates that those 20 customers are getting good value with Palantir and they're increasing their spending with Palantir. And if the top 20 are seeing good value, it's likely that everyone else is seeing good value with Palantir as well. The biggest companies usually have the least to gain with services like Palantir's. And what I mean by that is the least to gain percentage wise, because these large companies, they've likely tapped many of the opportunities in their businesses for revenue growth, for profit expansion. So there's limited areas for these companies to improve. That's why they're some of the largest companies in the world, or that's why they're some of the largest institutions in the world. And so growth is more difficult for a larger institution than it is for a smaller institution. Okay, commercial revenue, which is Palantir serving businesses, not governments, that revenue grew 27% year over year. Commercial TCV stands for total contract value. That was 505 million. That increased by a whopping 187% year over year. Total contract value are deals that Palantir signs and has yet to deliver the service. It might be that Palantir signed a $100 million deal for 5 years. So that would go in the books as total contract value. And then every month or every week that Palantir delivers the service, it goes from total contract value or remaining performance obligation, whatever they want to count that as, and it moves towards revenue. It moves into revenue. So first that deal goes in the books as a deal that is on the books, right? It's signed. They've agreed to deliver, but they can't recognize it as a sale or as revenue until they perform the service. When they perform the service is when it gets recognized as revenue. So these deals booked are a good sign of what revenue is going to look like over the next few quarters and over the next few years. And what this is demonstrating, 187% growth, is that revenue growth is likely to accelerate for Palantir over the next few quarters and years because it's signing deals that are much larger than its existing revenue growth rate. Okay. So US commercial revenue specifically grew 40% year over year. They booked 286 million of US commercial contract value, which increased by 131% year over year. So the bulk of that contract value, the bulk of that growth in commercial business came from US commercial business. That's the primary driver of Palantir's business. International was not as strong. Palantir saying that 149 million in international commercial revenue in the first quarter was up 16%, right? Much slower than the US commercial business, and it's highlighting continued headwinds in Europe. Of course, there are two wars going on, one in Eastern Europe and one in the Middle East, the Russian invasion of Ukraine and the war in Israel. And so those are both weighing on growth in the European economy. And the growth in European GDP is going to be much slower than growth in US GDP. And as GDP goes, so goes business spending. Businesses spend more when economies are growing, and businesses spend less when economies are contracting. And Palantir is impacted by multiples of the growth rate in GDP. So its government revenue grew 16% year over year. International government revenue grew 33% year over year. Now, its net dollar retention came in at 111%, which was an increase of 300 basis points from the previous quarter. That's great news. The net dollar retention measures how much an existing customer spends with you this year compared to the previous year. So let's say the same customer, you have them for 2 years, right? 12 months and 12 months. How much more did they spend on the most recent year versus the year before that? Did they spend more? Well, then that would mean your net revenue retention would be over 100%. 111% means that this same business over 2 years spent 11% more in their second year. That demonstrates that you're providing the business good value and they're increasing their spending with you. If you don't provide good value, they will not increase their spending with you. They will decrease their spending. They will switch to another provider. So all of this has led to Palantir having an ending first quarter value of 4.1 billion in total remaining deal value. That was an increase of 22% year over year and 6% from the previous quarter. They now have 1.3 billion in remaining performance obligations, which is an increase of 39% year over year and 5% sequentially. And remember, the remaining performance obligations, they say, are primarily comprised of their commercial business. Because of the way their government contracts are structured, they don't go into their RPO or remaining performance obligation. So given their conviction in the US business, coupled with their margin expansion, they intend to boost investment in resources in the US. So all of the things I talked about earlier, the growth in commercial business, in international business, the growth in deal value, all of the conversations they're having with customers, existing customers spending more, has given Palantir enough confidence to increase their capability or increase their resources. In other words, they're going to hire more people. They're going to expand if they need to expand in hardware, if they need to expand in office space to house these new workers. Whatever they need to do to expand their capability to serve, they're going to do that because they're seeing such strong demand and interest in their service coming in that they feel they need to invest to make sure that they can deliver on that service, to make sure that when a customer calls and asks for their service, they can say, yes, we can deliver, so that they're not turning down new business because they're saying, you know what, we're at capacity, like we don't have any more resources that we can deploy. They don't want to get to that. They want to make sure they have enough to fulfill on that demand. So good to hear and very informative, and Palantir stock investors should heed this information and consider it when making your decision about investing in Palantir stock. Thank you for watching this video. I truly appreciate it. I know there's a lot you could be doing with your time and a lot of other videos you could be watching. So I truly appreciate that you chose to watch this one. If you want to see more videos just like this, hit the subscribe or the like button. They'll both help me make more videos just like this one. Thank you again.